2025 is here, and it's brought several tax changes that business owners need to be aware of. If you're not prepared, this could mean potential headaches and surprises down the road. Welcome to CSI. I'm Jordan, and today I'm going to cover 7 changes that are currently in effect. And at the end, I'll go over some speculated changes that could also have a big impact. By the end of this video, you'll know what's happening, why it's important, and how to get ready. Let's jump in. Let's start with a big one, retirement savings. For 2025, the maximum you can contribute to a 401k is going up to $23,500, up from $23,000 in 2024. And if you're between the ages of 60 and 63, the catch-up contribution limit is now $11,250, thanks to Secure 2.0. That's a huge bump from $7,500. This means you and your employees can save more for retirement while cutting your taxable income. If your business offers a 401k, this is a great time to emphasize these benefits to your team. Don't forget to update payroll systems and educate your employees about this change. Next up, marginal tax rates. If you're an LLC or an S-Corp, this directly impacts you because your business income is taxed at individual rates. The top rate of 37% kicks in for incomes over $626,350 if you're filing individually, or $751,600 for married couples. All the other brackets have also been adjusted slightly for inflation. If your income nudges you into a higher bracket, your tax bill increases. Work with your accountant to look at income timing strategies or deductions to keep your tax liability in check. For family-owned businesses, this one's important. The estate tax exclusion amount is now $13.99 million per individual, up from $13.61 million. The annual gift tax exclusion is also increased to $19,000. Talk to an estate planner or an accountant to see how you can use these changes to your advantage. If you or your employees use personal vehicles for work, the IRS has bumped the standard mileage rate to 70 cents per mile, up from 67 cents. This lets you claim a higher deduction for business driving expenses. Make sure you're tracking mileage accurately. Apps like MileIQ can help with that. And update your reimbursement policies if you cover employee mileage. The AMT is designed to ensure high earners pay their fair share, and for 2025, the exemption amounts are increasing. $137,000 for joint filers and $88,100 for singles. The phase-out thresholds are also higher now. If you've got significant business deductions or investments, you'll want to double-check how the AMT might affect you. Fewer people are expected to hit this threshold, but it's worth reviewing with the tax pro. For businesses with employees working abroad, the foreign earned income exclusion is now $130,000, up from $126,500. If you have international operations, it's a great way to manage costs and support employees working overseas. For those offering FSAs, employees can now contribute up to $3,300, up from $3,200, and the carryover limit has increased to $660. This is a win for employees who want to save more on pre-tax medical expenses, and it's a great way to enhance your benefits package. Make sure your HR team updates this. Alright, now let's move into the speculative territory. These are changes that could happen but aren't confirmed yet. The QBI deduction, which allows pass-through businesses like LLCs, S-Corps, and sole proprietors to deduct up to 20% of their qualified business income, is set to expire after 2025. Many lawmakers are advocating to extend or even make this deduction permanent. If this deduction disappears, taxes for small business owners could increase significantly. Planning for this potential change now, such as by exploring other tax-saving strategies, will help mitigate its impact. Under the TCJA, businesses have been able to immediately write off 100% of the cost of eligible property, such as machinery and equipment, instead of spreading the deduction over several years. However, this provision is already phasing out and is set to drop to 40% in 2025, with full expiration by 2027 unless renewed. If you're planning to make large equipment or property purchases, consider doing it sooner to maximize depreciation benefits before the higher rates phase out. There's ongoing discussion in Congress about reducing the corporate tax rate from 21% to 20%, and even as low as 15% for manufacturers operating in the United States. If passed, this could lead to significant savings for C-Corps, allowing businesses to reinvest more capital into operations, hiring, or expansion. However, the likelihood of this passing depends on congressional dynamics. The $10,000 cap on state and local tax deductions introduced by the TCJA has been a point of contention, especially for businesses and individuals in high-tax states like California and New York. Lawmakers have proposed eliminating this cap, which could restore unlimited deductions for SALT. If this happens, it would provide substantial tax relief for business owners in these states, but there's still uncertainty about whether it will pass. So there you have it, the confirmed tax changes for 2025 and the speculative ones you need to keep on your radar. Staying ahead of these updates isn't just about avoiding surprises. It's about seizing opportunities to save money and grow your business. If you're ready to take action, you can schedule a free consultation with one of our experts by clicking the link in the description. They'll just ask you a few questions about your business and ultimately let you know whether a monthly accounting partner is what your business needs. If you want to know more about the cost, you can use our pricing calculator to estimate the range of what you can expect for your monthly fee. Or if you're looking for more free resources, you can download our Small Business Accounting Kit, also linked in the description. It's the perfect start for business owners who are ready to take control over their finances by managing their accounting and bookkeeping more efficiently. Thanks for watching, and don't forget to subscribe to our channel if you found this video helpful. We put out content each and every week geared towards helping small business owners just like you. See you next time.